Real estate is very much a people game because you have to assemble the right team to make it a profitable deal and a passive deal for you. And I'm going to focus in on 5 team members, starting with number 1, your property manager. This is the person that's actually going to manage the day-to-day stuff to make this deal actually profitable for you. So the way it works for me is when I find a good property and I get it ready, I'll hand over the keys to the property manager. That way they can find a tenant, they can make sure the tenant pays, they can make sure the bills are paid, and they can make sure I get paid because I don't know who my tenants are. My tenants don't know who I am, and I'm not involved in the day-to-day stuff because I don't want to get a phone call when the toilet breaks or something else goes wrong in the property. So for me, having a property manager is extremely important because I don't want to be the manager of the property. I don't want to be somebody who's getting those phone calls when things go wrong. I want to be an investor who spends my time trying to find more deals, not trying to actually just manage the deals because I can hire somebody else to do that. Now, a property manager is going to cost you somewhere in the ballpark of 7 to 12% of gross rent. Sometimes less, sometimes more, depending on what your property manager does and how many units that you have. This, for me, is well worth it. Some people make the argument, well, that's just money you're giving away to them. And you're right, you are paying them for a service. But what you have to remember is if you are doing the management yourself, you have to value your own time as well. And so either you're going to be paying somebody else to do this, or you have to value your own time and pay yourself to do that as well. And I'd rather pay somebody else. That way I can focus my time on building my business and investing in more real estate. The second person you need to have is a property inspector. This is somebody who's going to walk through the property with you before you actually close to make sure you know exactly what you're going to buy. And the reason why I'm such an advocate for you to get a property inspector as well is because there was one deal that I purchased a property without an inspection. And that was my nightmare property. That was the deal that ended up biting me in the butt because I bought this house on the recommendation of one of my contractors. The contractor told me that if I bought this house, we'll be able to make a lot of money because it doesn't need that much work. And the part that I didn't realize was my contractor was so insistent on me buying this property because he was in need of cash. So it was a way for me to write the contractor a check. Well, after I bought the property, not only did the contractor run away with the money, but I also found out that this property was completely destroyed and needed so much work. I made a video covering this on YouTube. It was still, to date, the only deal that I have lost money on. It was my nightmare property. It was a third deal that I did. I have a video where I went over it on YouTube. I'm not going to go too deep into it in this video, but if you want to watch that video, I'll link it for you down in the description. But what I want you to understand is when you enter into a contract to buy a property, whether it's a multifamily, whether it's a commercial building, whether it's a single family property, you're going to have a contingency period. You want to have a contingency period where you can do your inspections on the property to make sure that the property is not about to implode. And you want to have an expert here on your side to walk through the property and give you a report of all the things wrong in the property. That way you don't buy the property and then get hit with a flood of financial requests. The third person you need on your team is a good contractor. Now, this contractor, you want to be licensed and insured. And the reason why I say this is because I used to work with the unlicensed and the uninsured contractors. And these were cheap people. They would come in and do the work for a bargain price. And that was fine for a while until things started to go wrong. And as you start to grow, and as you start to have more deals, well, now your mistakes start to get amplified. And I'm telling you this because there's a saying in the real estate world which goes, if you haven't been sued yet, you haven't been in business long enough. When you get sued, because that will eventually happen if you're in business, you want to make sure you have the documentation to show that you did your work right. And it can help when you have a licensed and insured contractor that can prove that they're doing the work right. And when you work with an unlicensed and uninsured contractor, you don't have the protection when things go wrong with the city, because you want to make sure that you have somebody that can actually make sure they're doing the work right, because if you do it wrong, you're gonna have to pay to undo the work and then do the work again. I'm telling you this from experience because I had worked with many unlicensed and uninsured contractors, and then I had to pay money to undo their work and then redo their work again and again and again. And now I work with licensed and insured contractors. You don't have to work with the most expensive people. Hear me carefully. You want to find a nice middle ground. You don't want the cheapest person. You do not want the most expensive person. But there's this nice middle ground of people that are extremely hardworking at a fair price that will get the job done quickly. Those are the people that you want to work for, and it's going to require you to talk to a lot of people and fire a lot of people until you can find a good contractor. Number 4, you have to have a good accountant that can specialize in real estate investments. And again, I'm speaking from experience here because I've worked with good accountants and I worked with bad accountants. And I had a bad accountant before who was cheap. And when I say cheap, I mean the annual fee that my accountant cost me was very low relative to what I'm paying now. And what ended up happening was I got a call from my accountant one year in January, calls me when I'm in the office, and he says, "Hey Jaspreet, how are you doing? I need you to do me a favor and send $15,000 or $18,000 to the Michigan state government by the end of the day today, and then send an additional $100,000 to the IRS by the end of the day today. And you're also gonna have to pay penalties and fines on top of this as well because we made a little miscalculation on your taxes." True story. I went on to ask my accountant whose mistake was this. My accountant said it was nobody's mistake. It was just a little miscalculation. Well, it was clearly a mistake that should have been caught earlier. So I paid that money and then I proceeded to fire my accountant, and then I found a new accountant, and then what I realized is a good accountant is gonna do more than just file your taxes. They're gonna do tax strategy. And what tax strategy is working with you to discuss your plans, to see what are the ways that you can lower your tax bill based off of what the IRS says today. Because the reality is, and I'm telling you this as a licensed attorney, the IRS gives a rule book called the tax code. In fact, I will show you. This is a copy of the federal income tax code. Yes, I keep a copy of this in the office, and it is more than 2,000 pages long. And what this tells you is not you just pay taxes on your income, is it tells you all the ways that you can qualify for deductions, all the ways that you can qualify for different tax breaks. And real estate has some of the biggest and best tax breaks that our tax code has to offer, but the only way you can take advantage of them is if you have a good accountant. Let me briefly show you what I mean. Let's assume that I own this property right here and it's making $10,000 a year in profit. This is after paying all of my expenses. Now, normally when you have this $10,000 of profit money that's sitting in your bank account, you have to pay taxes on all $10,000. Well, in real estate, that's not exactly how it works. The first thing that you get to do as a real estate investor is you get to qualify for something called depreciation. This is a paper write-off. It's a paper deduction. I call it a paper deduction because it's only on paper, it's only on a tax bill. And so what you get to tell the IRS is, hey, my property is 1 year older. Because my property is 1 year older, I deserve a tax break. And the tax break is going to depend on what the property's value is when you bought it. So let's assume that you get to take a $6,000 deduction, depreciation deduction. I'm not actually going through the numbers here. This is just a hypothetical. This means you get to tell the IRS, hey, I made $10,000 in profit, but I'm only going to pay you taxes on $4,000. This is what real estate investors are doing all the time as a way to make a lot of money in real estate, but paying little to no money in taxes. In fact, some people will take this one step further, which I'll explain in just a minute, but you get to take this depreciation deduction even if the value of this property goes up. So let's assume that I bought this property for $200,000. Now it's worth $300,000. On paper, I've made $100,000, although you don't actually make any money until you sell. Even if your property goes up in value, you get to take this write-off, this depreciation deduction, because you're telling the IRS, because my property is 1 year older, I deserve to get this write-off. It's 100% legal. The IRS allows you to do this. Now, when you get a little bit more advanced, you get a little bit more sophisticated, you can do something called accelerated depreciation, which says essentially, instead of me taking a $6,000 write-off in year one, I'm gonna take a $20,000 write-off. I'm gonna take more of this depreciation in the first year of my property. So instead of having a $10,000 profit, I actually have a $10,000 loss on paper. On paper, because, well, I have $10,000 in the bank, but I'm telling the IRS I have a $10,000 loss. Now, depending on what my income is from my job, I could potentially take this loss from my real estate and lower my tax bill from my job. Again, this is gonna depend on how much money you have. If you're a high income earner, you're not gonna qualify for this, but some people will be able to qualify for this. Or you could take this loss and carry it forward to the next year. But that's not all. The IRS can go even one layer deeper with real estate investors. If you bought this property for $200,000, then a few years later, if you sell it for $300,000, you have a $100,000 gain, which normally you'd have to pay taxes on. Well, with real estate, there's another loophole. It's called 10 1031, the 1031 exchange. And what it says is if you sell your property for a profit, assuming you held on to it for at least a year, you can take all this new money, you can take all $300,000, buy another rental property, and now you can defer paying all of those taxes. So instead of paying the taxes on the $100,000 of profit, you could take all $100,000 plus the additional $200,000. So you take all $300,000, buy a new rental property, and you don't have to worry about paying any money in taxes on that gain. And you can do this again and again and again until you die and never have to worry about paying a penny in capital gains taxes. It doesn't work like that in the stock market. If you bought a stock for $200,000, or let's call it $200, then you sold it for $300 2 years later, and then you bought a different stock for $300 with your profits, well, you still have to pay taxes on the $100 of profit that you got. With real estate, you can qualify for this 1031 exchange. But again, in order for any of this to work, you have to have a good accountant, because there's a lot of nuances, there's a lot of moving parts, and if you do it wrong, well, you can get hit with big penalties, big fines, and potentially go to jail. So get yourself a good accountant who understands this and can help you lower your tax bill. And number 5 is get yourself a good real estate agent, a good real estate broker that can actually find you deals. And I'm saying this again from experience, because what you don't want is a lazy real estate agent who just wants a commission for not doing any work. Now, when I started working with real estate agents, I went out and got my own real estate salesperson's license because I didn't like the agents that I was working with. But now, after doing real estate for a long time, I have found that there are some good real estate agents and some very lazy real estate agents. What a lazy real estate agent will do is they're gonna want you to sign an exclusive contract saying that they're gonna get paid no matter what. They're gonna get paid no matter who you buy the property from and no matter what property you buy, even if you buy the property yourself through a deal that you found. Absolutely not. What I want is, if you find me a deal, I will pay you your commission gladly. But if you don't find me the deal and somebody else does, I'm not going to pay you your commission, because I want to work with whoever is going to bring me the deal, and I don't want to be exclusive to one broker. Now, what does that mean? I want to find brokers that will actually do the work in the industry that I'm looking to work in. So if I'm looking for single family houses to invest in, I want to find real estate agents that specialize in single family rentals. If I want to invest in multifamily apartment complexes, I want to find a broker that specializes in that. If I want to invest in office buildings, I want to find brokers that specialize in that. But the key is, you want to find people that are good and that can actually bring deals to you that you might not see otherwise, because guess what? Zillow and Redfin are very powerful. You can go on there and see a ton of listings, which you can do that work yourself. What a good real estate broker will do is, number 1, they will find you deals that are off market, that are not publicly available. And number 2, they'll be very good negotiators and actually fight for what you are looking for, because you want somebody who's going to be on your side, not somebody who's just looking for a quick commission check. You want to make sure that you can make money in this deal for years or decades into the future, and it starts with finding a good property, and a good broker can help you find those good properties. But there's a difference between a good real estate broker and a lazy real estate broker. There's a difference between a good accountant and a lazy accountant. There's a difference between good contractors and bad contractors. There's a difference between good inspectors and bad inspectors, and there's a world of a difference between good property managers and bad property managers. This is why real estate is a team game. You have to build a strong team, and it's going to require you to find people, hire people, and fire them when they're not good. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.